I want to bring in Carl Weinberg. He's the founder and chief economist of High Frequency Economics, joining us in our Chicago bureau. And Carl, always good to see you and to get your perspective. Okay, first off, the banking system in Europe. I mean, how much, how can they withhold, further declines in the euro and all this talk about insolvency over in Europe?
Well, hi, Betty. First, thanks for having me on the show. The banking system is kind of a dark hole right now. To me, the big risks in the banking system are related to liquidity. The shock from Greece is comparable, if you will, to the shock that the banking systems addressed after the failure of Lehman Brothers, after the failure of the mortgage-backed securities. And what we got was a logjam in the interbank market. Banks lend reserves to each other as a course of their normal business, an important part of their normal business.
Right.
And under current circumstances, they don't trust each other, so they're not lending to each other. And that means we have a shortage of reserves. That's the basis for a new round of credit crunch, which is a really bad thing for the macro economy. But
these are predictions, Carl. I mean, how much do you know is actually happening at this moment?
Well, we see LIBOR rates going very high. We see interbank overnight rates going very, very high. That's the telltale indicator that we're looking at. We see more banks showing up at the ECB's repo operations, which are essential because those repo operations are also have to be part of the ECB scheme to sterilize its bond purchases. So we see a lot of evidence in market action suggesting that the banks are just not putting as much money into the interbank reserve arena as they ought to be.
Right.
And as a result, credit conditions are getting tighter.
Is the web of exposure, though, in Europe, Carl, as bad or worse than what we saw during the Lehman crisis?
Well, this is the question, right? We know that the ECB and the other central banks know how to address this question. They have to pour liquidity into the market without limit, without question, without delay in order to offset it. And this was a critical part of Mr. Trichet's press conference and speech after the EU IMF package was announced. The ECB committed to 3 new repo operations, the 2 3-month operations and a 6-month operation. And of course, they continue to offer money on a 7-day basis.
Right.
As part of their regular operations. So this is a really good sign. It means that they're on the spot. The thing is that they're offering money at a punitive rate, so they're not making funds available except the banks that are really desperate. And other banks may not be able or willing to go to that window for those reserves, and that could create a problem on their part.
Right,
if they get into trouble, Betty, they're going to start pulling back loans, and that's the risk to the economy.
Okay, so bottom line, Carl, how likely, though, could we see any type of default or bankruptcy from what you're noticing right now in the interbank market?
Well, I'm going to dodge your question, Betty, because I just don't know. We really don't have enough experience with this kind of an event to be able to tell. We know that in the case of the Lehmans and the MBS meltdown, that when we had those crises in the banking sector, that the central banks did do whatever had to be done and fixed it. So we're optimistic they'll do it again, but we can't put a percentage on it now.
Okay. All right, Carl, good to talk with you.